What's up, guys? Sean Emery from Avory and Company, an investment firm investing where the world is headed. Today we're covering Meta's earnings report. They just reported, and on the top line, some of the basic stats here: $39 billion of revenue, 22% revenue growth, 38% operating margins, of which 50% operating margins for their family of apps business. Again, that's WhatsApp, Instagram, and their core business of Facebook. So that business itself is doing 50% operating margins. So what does that mean? That means some of the fallout of that is coming from Facebook Reality Labs, which continues to burn somewhere between 18 to $20 billion a year. There was a lot of talk on the earnings call, specifically from Zuckerberg, around the success they're seeing, not only from the Quest devices, which is really the VR experience, but also from their much more AR experiences from their Ray-Ban, Meta glasses, which are undersupplied, which means the demand is outstripping supply. If you go on their website, you can see that yourself. Different colors. They have it in core black, but they don't have it in some of these other more interesting SKUs, I guess. Now, if you look at the engagement on the platform, their daily active users across their family of apps continues to grow in the mid-single digits. 3.2 billion people visiting it on a daily basis, which is quite profound. Within that, there were some interesting data points, whether it was that Threads, kind of that competitor to Twitter or X that was launched roughly a year ago, is approaching 200 million users on the platform, which just suggests that this is becoming, their fourth large platform outside of, again, Instagram, Facebook, and WhatsApp. The other, stat that I think that was, fairly interesting was 100 million active users on WhatsApp in the US. And that's an important data point going forward, simply as we all know WhatsApp has been somewhat under monetized historically, and US tends to be the biggest market for monetization for every social media company and every company generally more broadly, just given the GDP per capita and spend per capita. Now, if we switch over to the CapEx, which was a focus point, they raised the bottom end of CapEx, but they kept the top end, and I think the street likes that. There's a lot of talk across, big tech more broadly, which is, how much are they spending and how much are they getting back? Traditional equation of, spend and returns. And so seeing that, they're growing by 22%, their guide for the quarter suggested that on a FX neutral basis that they'll grow high teens. This just suggests that return is continuing. The CapEx cycle for them is very similar to the previous guide, which wasn't a surprise, let's say, to the street from the standpoint of increasing CapEx going forward. Now, there was a couple points on CapEx, right? Because we know where CapEx is generally going. And I think, Susan Lee, the CFO, did a nice job of articulating, their spend at Meta across AI. And, they referenced core AI, which is, what Facebook and Instagram and some of these platforms have been built on. And then there's generative AI, which is kind of the AI that I think everyone has been, referring to over the last year and a half with OpenAI's launch of ChatGPT. Two distinct things, and I think they're in different cycles of their maturity and also their payback. So you take something like core AI, which is embedded and has been embedded in their search feeds, has been embedded in their advertising stack, and also for from the user experience to the creator experience to the advertiser experience. I think core AI, they highlighted how obviously a lot of their spend is going towards that, but they're generating a healthy return. They didn't quantify it exactly, so it's a little bit masked by just generalizations from the company. But then you also have generative AI, which again is creating and developing new products. Zuckerberg, I think, was very, very clear about his ambitions there, but also the timeline. And I think that's what Zuckerberg does really well is, he does set the tone in terms of, current spend versus, what you should expect in terms of timeline of return on investment. So he said this will be a multi-year thing. And, some of the different areas that I think, highlighted here is really how AI will be embedded across, Facebook, Instagram, WhatsApp, and then even their Quest and AR platform with the Ray-Ban glasses. Even suggesting to one extent, I'll go from the end of that to the beginning, which is Quest and AR. This is virtual reality, augmented reality. He was under the impression that we would see holograms and AR holograms before we would see, kind of an AI assistant. And has been surprised and also enthused, that we're seeing the reverse of that. And that's what's making Ray-Bans, the Ray-Ban, Meta Quest glasses, really interesting. And also for the Quest platform, where, you can have their Meta AI assistant where you can talk to these things in natural language, which again is where that generative AI spend is going. Now, the WhatsApp side of the business, again, 100 million users in the US. I think that's the big takeaway there. But ultimately, how AI is going to be embedded across there. They have AI Studio. They have their AI, Meta AI assistant. So you can communicate with their assistant. But then also for advertisers and or creators and or businesses will be able to use AI Studio for things like, embedded chatbots. Whether it's a company or a creator, you can have it, communicate with your following and or customers for businesses through WhatsApp. So that's ultimately how I think it's going to be embedded there. The Instagram and Facebook are a little bit more obvious, where it's going to sprinkle across all the different participants in that platform. Again, the creators, the advertisers, businesses and creators are similar, and then the users experience from a personalized feed standpoint will be enhanced. From an advertiser standpoint, they highlighted a bunch of interesting things where actually ad load doesn't have to increase, yet they can be a little bit more specific in terms of what creative is presented in front of users, but also understanding when to present those. You can imagine 10 years ago, 15 years ago, there was a cadence of maybe when an ad was delivered, every 3 reels, every 3 carousels. But now with, their core AI and their generative AI, they can be a little bit more specific, like time of day, the who's, where, and what's of when they want to deliver an ad. And then also in like their Advantage Plus platform, which is for advertisers, you can put multiple different types of creative, whether it's videos or different photos, and the AI will, in its best way, try to understand which one of those, 10 videos that you put in there is best for that specific time to that specific user. Again, this is a lot of minutia in terms of how AI could be embedded. And then Facebook, same thing. They re-platform Facebook. They talked actually a lot about Facebook. I think, just, speaking with some people, the fact that they spoke so much about Facebook this earnings call, I think says a lot about maybe the direction of Facebook and, kind of a second, third life of this platform. They highlighted a couple things that I think that stood out. Number one is obviously they're re-platforming, a lot of what's going on there, everything from video to the advertising stack for advertisers. But then they also highlighted how the demographics from an age standpoint is aging down to some degree, that they've emphasized, going after that 18 to 29 cohort, and that they're seeing a lot of success there. So I think pay attention to that. Marketplace, Facebook Marketplace is actually doing a really good job of not only having, ad listings, but also getting more and more traction there. And they talked about that. So I think, watch out for Facebook, as a second, third life. And that's kind of how AI is being infused across many of these things. CapEx, I'll just highlight there and then I'll wrap. CapEx, they held the 2024 number, like I said, but they did highlight 2025, a meaningful increase. A couple questions to think about really, where was, they have Llama, which is their open source AI models, Llama 3.1. They highlighted how that will have 16,000 NVIDIA H100s that are going to help train that model. Then you have, Zuckerberg on the call mentioned that, Llama 4 is going to be kind of 10x the compute resources required. And, that implies something like 160,000 H100s. Yet, 6 months ago, they said they'll have 600,000 H100s by year end. Again, it makes you think about, the delta between those like three figures. So if that's 160,000, they'll have 600,000. Are they overspending today and seeing what happens in the future with AI? You should assume that as models get, as time goes on, the compute resources required actually, the curve of that starts to come down as opposed to go up. I guess we'll see. But I think, to wrap up, Meta is the best position probably to have overcapacity, just given the fact that they are already using AI inside of their platform. They have the open source model of Llama, which does multiple things. It helps, them individually in terms of creating the models that they're going to use for their platforms. But then, Zuckerberg has been very clear that they are going to have, they're doing this in multiple ways for themselves, but also for the industry so that they can create the benchmark for models and essentially have the platform, instead of being, or succumb to the Apples and Googles of the world, and really being that foundational layer. This isn't the first time they did it. React, PyTorch, these are different things that they've open sourced in the past. So they've historically done this. There's been some thoughts that they could create a cloud computing model. I think that was clearly shot down here. We've been saying for quite some time, we don't think Meta is really in the game to be, the fourth or fifth cloud business out there behind Microsoft Azure and Google and Amazon and Oracle. And that, the real proof in the pudding of that was PyTorch and React and some of the other open source stuff they've done in the past. It's more important for them to create the foundation so that they can build with kind of like some foresight going forward, knowing that the elements of their compute will not change, and that they'll be the driver of where AI is headed. So anyways, I'll end there. Good quarter for Meta. Zuckerberg really focused on some of their emerging platforms, which is whether it's WhatsApp in the US or Facebook, kind of getting the second win. So look out for that. Compute capacity, 2025, expect more CapEx, but Meta is well positioned to absorb CapEx, just given the fact that AI is so embedded in their platforms. They don't actually have to create, this magical product for enterprises like everyone's expecting for someone like Microsoft or some of the other players out there. So with that, we'll have more of these postmortems. Square, PayPal will be combined. We'll have Fiverr and some others as they come. So stay tuned, and we'll see you next time.